Hello everyone, how's it going? In this video, we're going to talk about Palantir, trading under the ticker symbol PLTR. The financial market has been going through very volatile swings recently, and one of the most talked about and sought after stocks is Palantir. In this video, we will go through what the company does and what it represents, the recent price action, the company's financials, and my recommendation regarding whether it should be bought, sold, or held. If you appreciate my content, please consider to drop a like, comment, and to subscribe to my channel. Also, please check out and use the links in the description section, as every help is greatly appreciated. So, over the past few days, Palantir has been doing as well as it could, meaning it's trying to gain back above like $10, but this has been proved it to be a pretty toilsome journey, and I don't think that they will be able to reach it within the short term. So the tendency remains, I would say, bullish, and it has been bullish since the beginning of 2023. With that being said, does it really mean that we're looking at a recovery from now onwards? Maybe not. Okay. And I want to talk about like what I'm getting from the noises of the market. What I'm getting right now is that the market is judging Palantir from a like a fundamental perspective. Do they have good profits? Do they have good numbers? Do they have good growth? This and that. And from that point, Palantir maybe has disappointed over the past few days. Sometimes it's also a question of analysts giving it, a different treatment. Maybe they were saying that, oh, it's not doing so hot right now. Oh, I think that they're going to have a lot of legal liabilities because of the nature of their operations. Oh, I think that there are more alternatives around. Oh, maybe the big businesses are getting more heat at the moment. Oh, who's going to change? Who's going to have, the ownership of our data? That kind of thing. And to those, so far, I have to say, we're not really answering those questions, or we're not even fully asking those questions just yet. This is interesting. Like with, you would expect that with all kinds of whistleblowers, with significant lawsuits, so on and so forth, you would expect that maybe people are going to be more aware of those, that they're going to be more sensitive. But when you think about it, the same people who buy Palantir are the same ones who, just a few years ago would have bought like a Guy Fawkes mask and go protest, or to pretend to be some kind of anonymous hacker. You know what I mean? Like, my feeling is this is a very similar crowd. And somehow we have decided collectively that we're not going to bother asking those questions this time, or we're not going to put them at the forefront of the issues. The forefront of our issues is my savings. Is it going to be able to flourish thanks to Palantir? I've dumped in 40% of my portfolio in Palantir. Am I going to go broke? Am I going to make it? So, because of those, my feeling is, for the time being, we're not asking ourselves those questions hard enough, not nearly enough. On the other hand, we might start asking them just a few years down the road, especially if, just imagine if we are in the middle of summer, nothing is going on, and all of a sudden there's a major leak. There's a leak of like agreements between Palantir and all other kinds of, government entities, big businesses, and we have realized that, oh shoot, they were handling our data pretty, fast and loose, right? This is going to cause some issues, in my opinion. And then people may start wondering, you know what, is it a good idea to give our data away at all? And this kind of company are they working with like blood money, or are they working with like problematic entities in problematic projects? Because we have to remember that the analytics of data is a fairly touchy subject in the field, right? Because it's got to involve privacy at some point. It's got to involve the ownership of those data. It's going to involve the keywords such as, big governments, big brother watching you, so on and so forth. So this is why Palantir does have this potential issue here. So far, they have benefited from the fact that it's a bit old. Like this trend has now passed a little bit. And the other thing is, I would say that Palantir kind of benefits from the image. And I want to emphasize on the image of his CEO, Alex Karp. Because Alex Karp is someone who, publicly given flack to his fellow Silicon Valley colleagues, and he treated them maybe as bad as how the elites treat us, to be fair. But so this is why like people see him maybe like a maverick when you see his crazy hair, when you see that, he doesn't care about showing up in Davos and give interviews over there. And people kind of welcome this wave of fresh air, or slightly fresher air back then. Has that ship sailed? I don't think so. Like maybe the majority of it has, but there's still a part of it that's around. Like that's my feeling. It's not completely gone. And because of this, I would assume that despite like those challenges ahead, Palantir remains a company that has a certain future. People are never going to let Palantir go below a certain price point. Where is that price going to be? Is it $7? Is it $6? Is it $5? For the time being, it seems like 7 is the level that they're not willing to send it like below that level. Okay. We will still have to see, because if we think about it, Palantir is one of those companies that's highly dependent on the market overall. And the market overall at the moment is saying that, it's been a heck of a ride, right? Especially the last 5 years. So we're now going to think about whether we should go to a recession, and maybe to the same magnitude of like the increases. So if that's the case, let's say S&P dips by 20%, or NASDAQ dips by 20%. How long is that going to take before Palantir dips below like $5? You see what I mean? Or getting very close to $5 or $4. If that happens, then I would say that it would be a good time to start buying Palantir, to be honest. For the time being, I have a position. I think it's like 0.5 or 0.6% of my portfolio. So I still have some room to go. And I think that I'm going to slowly spend it over the next 3 to 5 years. Because regarding Palantir, my personal approach is to trade it. This is why I am personally not willing to trade the short-term trends or the swings. I think that the long-term investment approach is the way to go. If we look at the long-term price action of Palantir, we must ask ourselves whether this company will have a place in the economy of tomorrow. We know that the company will not be profitable for another few years. That much has already been priced in. We also know that Palantir is in a highly sophisticated area of the economy, and that it aims to become the analytic dashboard of the wealthiest entities around the world. The true debate is whether Palantir itself can stand the test of time and whether the market will believe in its potentials to become something bigger and more critical. Palantir fell by almost 80% from the peak of the share price, from $35 down to $7.28. Much of this is due to the overall market trend, and the rest is caused by doubts on the company's growth potentials, as well as the business model to work with government agencies. Now, personally, I believe that Palantir has been testing its bottom for some time now, as the downward slope stopped the progression for more than 6 months. Ever since the price reached about $8 back in May of this year, the rest of the downward slide is probably caused by the habit of just going lower by default. Does this mean that the stock will reach new high very soon? Maybe not. But on the other hand, I do believe that Palantir will have a place in the future and that its price is due for some significant change as well. Given that it's been down by so much, the only logical direction that it's going to go is going to be up. Palantir Technologies is a software company specializing in providing big data analytics and management solutions to various industries, including finance. The company's flagship product, Palantir Gotham, is a powerful platform helping organizations to make sense of their data by providing advanced data integration, analysis, and visualization capabilities. One of the key features of Palantir Gotham is its ability to integrate data from a wide variety of sources. The platform can work with structured and unstructured data, including text, images, and videos, and can also handle data in multiple formats and languages. This makes it an ideal solution for organizations with data spread across multiple systems and departments. It also provides advanced data analytics capabilities, including natural language processing, machine learning, and predictive analytics. Those features allow organizations to uncover hidden insights and patterns from the data. Another key advantage of Gotham is the ability to provide secure and role-based access to the data. The platform uses a combination of technical controls and policy-based access to ensure that only the authorized users can access the sensitive data. This is very important for organizations in the financial sector, which are subject to strict regulatory requirements for data security and privacy. Palantir's solution is widely used by government and intelligence agencies, as well as by major financial institutions, consulting firms, and other kinds of organizations around the world who can afford it. This is due to the platform's ability to help these organizations to make sense of their own datasets and to identify patterns and trends that could optimize their decision-making. Now, as we look at Palantir's financials, the first thing that is noticeable is the positive gross margin. Above all else, this is a decent reminder that the company's core business seems to work. It is true that revenue has been growing slowly, which sparked some worries from investors, but the fact that the gross profit is positive means that the main issue is the scalability and the diversification of its operations, which may solve the problem once they reach a critical number of clients. We gotta remember that Palantir's revenue managed to grow despite the fact that there is a de facto recession in many economies around the world, meaning Palantir's clients are relatively robust, which can be a good thing for the company. The cash flow reports suggest that despite having a net loss due to the fixed costs, Palantir can self-finance significant portions of its operations with a positive free cash flow at the end of each quarter ever since Q1 of 2021. This means that the pressure of Palantir to go through rounds of share dilutions would be relatively low, which is a good thing for the shareholders. Another significant aspect to consider is that its liabilities seem to be under control, currently around $933 million, which is mostly constant and slightly decreasing compared to the previous quarters. This is also very reassuring and suggests that Palantir is also keen on making sure that they have a low leverage, decreasing their solvency risks. There's about 33% of institutional owners amongst Palantir's shareholders. So what this means is that Palantir does have a significant endorsement from the money managers, but they are largely outnumbered by the retails, and that there will be a significant chunk of people going in and out of the stock based on the market movements and the short-term price actions. It would also suggest that Palantir is good for investment, but if we do so, we must be aware of the people who want to profit off the swings, meaning we need to ignore the short-term volatilities. One key behavioral difference is that institutionals can afford to wait longer for their profits, whereas the retails tend to come in and out in very short periods of time because they want to make quick profits. Also, institutional shareholders tend to be more active in corporate governance. They are more likely to vote on important matters like mergers and acquisitions, compensations, appointments, and so on. They're also more vocal in their opinions, whereas the retail shareholders, they tend to be more silent and more passive in front of different decisions to be made. Currently, there are around 4.2 million shares shorting against Palantir. Some believe that there might be potentials for a short squeeze, because those 4.2 million shares would need to be redeemed at some point, and right now it takes about 4 days to fully recover. With that being said, I believe that Palantir currently has a certain volume of short positions because people truly believe that the company has a lot of headwind against it. I don't believe that they are concerted, and they're also not entirely institutional. It's important to note that a short interest is not a guarantee of a short squeeze, but it's a metric worth monitoring for the investors. It's also worth considering that the short sellers may have valid reasons for their bearish sentiment, and a short squeeze may not happen regardless of how many stars are being aligned. Having said all that, so my personal recommendation for Palantir is to start buying it now if you haven't done so already, but to stretch your overall purchases over the next 3 years. I think that a recession is going to ride the worst of it out within the next 3 years. I don't know by how far. I don't know how low or how high that's going to go. This is impossible to predict for sure. But during this period of time, if Palantir is as solid as it seems, if Palantir is as indispensable as its CEO lets to believe, then it's going to survive this recession. And by then, there could be, larger whales who believe that, well, it's pretty cheap, right? And I manage other people's money. I might as well just put in, 2 to 3% of my portfolio in this company now because it's low enough, it's legit enough, it's making positive cash flows for the most part. Or by then, I hope that it makes 100% of its cash from its own operations. So there won't be any problem. And this is what I would like to see. And personally, my approach, like I said before, is going to be, I will be buying Palantir over the next couple of years. And I will see whether it can become this late blossomer that it claims that it can become. The overall exposure I would recommend would be around 5 to 8% of your portfolio's capital.